Hello, everyone. Welcome to the market update for Tuesday, November the 30th. Lots happened since we had the last market update. We were throwing a big curve on Friday. It's not that the market can't have a sell-off on the day after Thanksgiving. That's happened many times before. But again, to have a big news event, kind of the panicky selling that was taking place, the big drop that we saw, that's really unusual. And so, but it's a reminder that, you almost can't take any days off if you're going to have anything in the market, which is why, if I have a big vacation planned, especially one that I know I won't be able to check on things in the market, I like to try to get out. At least out of trades. If I have investments, obviously, you're not going to be reacting usually to short-term market movements on those. But even then, you've got to manage those trades. You have stop losses. I usually try to get out of a lot of stuff, though, knowing that I can get back in, but just so that I don't put myself in a position where something like that happens. I was planning on taking Friday off, but I knew the night before when some of that news was breaking that I was going to have to do some work that day, and luckily it was only a half day. But I think that's what compounded some of the selling was that you had a combination of low liquidity. There weren't a lot of what happened on Friday was that you had all these stop orders getting triggered because people set stop orders, and especially when they're not planning on, being there. You have all these fund managers that are trying to take vacation or take time off. That's an ideal weekend to take time off because, the market's open at close on Thursday, and then you can have that 4-day weekend, which is very rare to get a 4-day weekend if you're a professional trader. And so all those stop orders were getting triggered. Okay, so all the selling's happening, but there's no buyers. There's nobody buying, or really no dip buyers either that day. I'm talking in generalities. Obviously, there were people trading, and there were professionals as well as retail traders that were trading, but just not as many. And so that's what we talk about when we talk about liquidity. There weren't enough people there to support that selling to buy as those indexes were dropping. I think what we saw yesterday was a little bit of that dip buying that took place. That people that didn't buy on Friday were buying yesterday, thinking that things are going to go right back up again. And then we have more bad news, or market bad news, so to speak, with Jerome Powell coming out saying today that he's going to speed up the taper, and so the market's reacting to that. Now, what does that mean? Well, that's what we're going to look at today when we get to the charts. But to start off with, let's take a look at the direction alerts. We're right smack in the middle. The momentum is right in the middle here. So we're still not in an extreme oversold range yet. So could we see more downside in the indexes? That's possible. Like I said, when we look at the charts, I'm going to show you a couple key support levels that we're going to need to pay attention to. But there's room to go down, and there's also obviously room to rally if the market does just decide to rally from here. It's not even close to an overbought condition. Brett, same thing, or right smack in the middle there. Could go either way. Again, what's surprising is sentiment is still very, very high. What that tells me is that really no one is fearing a big correction right now. Now, that could be dangerous, especially after all the selling we've already had. It could really turn into panic selling if we start to flush out and really start to drop. Could that happen? It can always happen, and it can happen when you have no one that believes that the market's going to do that. You have the high sentiment levels. It would have been probably a little bit nicer over the last few days to have this at least get a little bit closer to that trending box down there, but to remain elevated like this. Well, more than anything, it tells me that if the market does rally from here, that when it does correct, it's going to really get ugly. It's going to really have a massive sell-off because so many people just aren't expecting it or believing it's going to take place. And again, that's what fuels that panic selling that creates those big drops. So this is something we'll continue to keep an eye on. But if the market does get panicky from here, this could be a reason for it, is the fact that so many people are thinking this is temporary. They're looking to buy the dip, and it's when they buy the dip and then it rolls over again, and that's when that panic starts to kick in. As far as the buy-sell ratios, we're seeing a pretty wide margin here, sells to buys. So this is starting to get extreme here. Could get a little bit more stretched as we've seen before. And that would indicate, or that would show up in particularly the support level of the S&P 500 that I'm looking at, where there could be a little bit more downside, but we might be close to bottoming out if this is just a short-term correction. Another thing the market has going for it is just seasonality. This is typically not, you don't see a lot of major market crashes in December. I know it's still November, but we're basically, heading into December here. After Thanksgiving around Thanksgiving tends to be very bullish, as I've mentioned many times. But I've seen it happen. We've had some big corrections that have taken place at times. It's just usually rare. So you usually anticipate that what I would anticipate is if the market isn't going to have a major correction in December, that it would be kind of back and forth. It'd be whipsaw-y, and then have that bigger sell-off after the new year. There are a lot of big corrections that do happen in January from time to time. So anyway, so that's what we're looking at here. We are a little stretched from the buy-sell ratio point of view, but like I said, just when we're looking at direction alerts, we're not oversold as far as the direction alerts are concerned. So there could be a little bit more pain still on the downside there as a possibility. We're also very low on the overall market buy-sell ratio, 0.15. So we really shouldn't be adding anything to the portfolio, which I'm not. In fact, I may get out of almost everything today. There's only really one stock I might continue to hold. There is one that I do need to definitely stop out of, hit its stop loss today. And then there's another one that's close enough to its stop that I think I'm going to go ahead and get out. And then there's the only bright spot that of the portfolio that's making money that is hitting kind of a critical area where it could pull back from and showing a little bit of a bearish reversal today that I might go ahead and take profits on it. So that's all right. We've been able to be mostly out of the market on the selling to where the downside hit hasn't been real big. And now, because we have so much capital, if it does start to rally back up, we should be able to recover the losses very, very quickly once the market has bottomed and starts to take off again. There's a lot of opportunities out there. Now, I will build some stocks or add some stocks into the watch list. I'm also going to drop a bunch of stocks from the watch list when we get to that part of the class. Some of them I just, they'll show up again if they come back, if the charts come back, they'll show up in those scans that we look at every week, and so we can add them later if we need to. Sentiment indicator here is well off the extreme. It's still not oversold. Again, it's been down here before. There's not showing a lot. Not a lot of people are overly fearful about this selling so far. Now, again, you can look at that from two different angles. You can look at that as, well, that means that this could be just a short-term pullback, and if the market does stabilize, it could rally back up pretty quickly. Or you could look at it from the standpoint of things could really get ugly because we haven't really been fearful yet. The market really hasn't freaked out yet. Now, don't get me wrong. When I say that, it doesn't mean I'm saying it's a coin flip and we're just guessing, and everything we're doing is guessing. What we're looking at is we're looking at those two different possible outcomes, and then we're combining it with other things. I mentioned the seasonality. We got to factor in seasonality, because tends to be a little bit more bullish time of the year. People are more in a buying mindset that it could prevent possibly a bigger correction. There are things that we could add, clues that we could add to either of those outcomes, and then how the actual chart starts to behave. Do we see a rally off of some of these support levels that has some breadth behind it, participation behind it? We're just not there yet to be able to make that decision. All right, so let's take a look at our charts. And the key area I'm looking at here on the S&P 500 is this last breakout area right here. And we're not too far away from that. Back at the lows of the day, we're really close. I believe it's at about 454, 453, 454. I guess I could look over here for the exact number. The high of September the 2nd was 454. So 454 is kind of the key spot. I could draw a straight line. I'm not going to be able to draw a very straight line, but so that's an area to watch. See if it can, that was where it broke out on this move higher. A lot of times stocks will come back, and what used to be the ceiling becomes the floor. Now it could also dip a little bit below that. Sometimes you'll see it come back, and it'll test it a little bit. It'll drop a little bit before it, and then below it, and then buyers will push it right back up, and then it can really start taking off. But that's going to be a key area right here, and it doesn't look like we're going to reach it today. In fact, we're off the lows a little bit. But if this were to close this way, and even if it were to rally back up, if it can close higher than where it opened, if it can get above here, that would still be bearish in my opinion. It could end up having a big gap down. What I'd really love to see tomorrow, if I were wanting to turn more bullish on the market, would be any type of close today. I don't care where it closes today, but to see a big gap down and open right at that support level and then start to rally it up from there. That would be a pretty strong bullish reversal. I'd still wait till the end of the day to make sure that was holding, that it was going to close higher than where it opened. But if it could open right at that key support level and rally up from it and have decent volume and all that, then I might say that at least in the near term that the market could start to rally back up from there. If it breaks significant below it, particularly if it breaks below it and closes at the lows of the day, something like that, that would concern me quite a bit. Because right now, this seems to be a very important area, particularly as we look at some of the other indexes. Now, if we look at the Dow, the next real support level for the Dow is all the way down here, which I don't know that it would drop all the way down, although we've seen it drop faster than the other indexes. The Nasdaq 100 has been holding up the most. Again, you could look at that two different ways. We look at in fact, let's look at the Nasdaq 100. You could say, because the large cap tech has been holding, it hasn't really dropped much, that could be a signal that things, because it tends to be the leadership. It's been, those tech stocks have been leading the way for quite a long time. FANG stocks and things like that it could just rally right back up, and the rest of the market will follow. But I tend to believe, knowing that typically stocks don't pull back and then take right off again, that this is wave A, this is wave B, and that we still have wave C. And I expected it would pull back, at least first target area would be that breakout area here. So about 384 or so on the Qs. So that's showing a little bit more downside potential there. Again, the way the price action is, where it tried to rally yesterday and then now it's back down. That looks like that suckers rally. It's acting like a wave B. Remember, wave B is a suckers rally, and that's really what yesterday felt like, is a suckers rally. And we'll see if we get wave C that comes down, and that would be the target area there, about that 384. And then on the Russell 2000, we have to actually go out to a longer term chart to kind of see we're down to that lower, that bottom range that we were in for several months. So there still could be some more downside potential there. But this is what really concerns me, is that you had impulsive up. This is definitely corrective. And then you had the breakout. You had impulsive up right here. And now you've got impulsive down that is threatening to break below that low. If it really breaks below this low, that would really be bearish for the market. That's going to be really key to watch this week. If we do get more selling and the Russell breaks below this low, now you say, well, where exactly is the low? There's these extremes down here. Actually, this might be a better trend line right through here, about 210, just because you get three major touches on it. You did get a little bit lower down here, but that's the only lower move. You were a little bit more shallow right through here. So, but if it breaks below that, man, that's really going to be bearish. Because remember, the Russell tends to be a leading indicator of the rest of the indexes. So if it's breaking below a very, very key support area, chances are the rest of the market is going to follow. Now, what really concerns me is if you look at a lot of individual stocks, particularly small cap stocks, a lot of them have already come way down. A lot of them have already been beaten up quite a bit. And so the fact that it's possible it could get even uglier than that, that definitely concerned me a little bit. But that's going to be key to watch. So as you can see on all three of these, that there is some support nearby, but there is that potential for that more down. And I would lean a little bit more towards that probability of a little bit more downside. Now, I've had that expectation before, and we've seen the market charge right back up again. Back in this area right here on the Qs, I thought that maybe this was wave A, wave B, and we might get a wave C that comes down to that breakout area there. It didn't happen. It charged right back up again. Maybe what's making this feel a little bit different is that you have a little bit more of a head and shoulders look now, especially since we're reversing off of yesterday's rally, and the fact that we're reversing off of yesterday's rally right at the same spot as this area over here. The left and right shoulders, the head and shoulders pattern tend to be lined up in about the same spot. And we're definitely there. That would be your neckline down here. If we break that, we're definitely heading lower. But I mean, like I said, there's been times where, I thought a bigger correction was going to happen, or a decent correction was going to happen, that the market just rallied right back up again. Could be different this time because of the fact that we've had the Fed on our backs as buyers, and now that talk of the taper. It's that first realization that the Fed is slowing things down. They haven't talked about raising rates yet, but that would be the next step. And the talk too about inflation being less transitory and more here to stay is only going to accelerate those types of tightening behavior. So that could be viewed as being different. The market has shaken some of this stuff off because of the fact that we hadn't heard anything from the Fed related to slowing things down a little bit, and now we are. So I think that's something to consider or factor into the decision-making process as well. All right, so what about some of the other charts? Bonds are in a very key breakout area right here that they they've been back and forth. They had this higher high, higher low through here. And you had an impulsive move down that went to a lower low, rallied up with a lower high. It looked like maybe bonds were going to be trending lower there. Then it came back here, it had an even low and broke out to a higher high. This right here was a slightly higher low. So it's been back and forth. It's been kind of all over the place. And so when you start to see that whipsawing, you want to kind of back out a little bit, see if you can identify kind of the critical areas. Obviously, I think it should show up that right in through here is we're at a critical breakout area. If we break out above this, that'd be very bullish for bonds. And then obviously you had a double bottom right here, so any break below there would be more bearish for bonds, although we broke to lower lows and whipsawed back and forth. This is also a key low down here. This is the last major low of this sideways range. A break below here would probably indicate that you're more likely to move down towards this area, and then a break below that would be very bearish for bonds. But overall, this is looking bullish for bonds, looking like bonds are breaking out. Now, again, don't forget a relationship that I've talked about a few times, that when markets sell off, there tends to be money that comes out of the market and goes into bonds. These are professional traders that do this. The average Joe trader doesn't. They usually just go to cash when they get out of the market. But these money managers are always, they have billions of dollars they're dealing with, and they're wanting to make some return on it. And so even though the return on bonds is very low, they'll put their money in bonds as a way to kind of park it there, protect it till they're ready to get it back in the market again. Now that relationship doesn't always exist where bonds are up and the market's down, and bonds are up. Or markets up, bonds are down. I think I did. Inverse relationship is what I'm trying to get at. It's not always that inverse relationship, but I think it's worth noting here that we're at a spot where we're hoping the market holds support, and we're at a spot where bonds could break out and go higher. And so if you're more bullish, or you're wanting to buy the market and buy the dip, so to speak, I think you'd want to see bonds start to back off of that major breakout area. You'd like to see it start to move back down and move down to these lower levels. If we break out above here, I think that would probably coincide with the markets breaking that key, especially the S&P breaking that key support level. And so this is something that I think we want to pay attention to. Where do we break? And that could maybe tell us if we could be in for a bigger correction. I think if we break above here, we're in for a little bit bigger correction. Gold's been all over the place. And we finally broke out of a major sideways range right into here. Want to come back down. Now you have impulsive up, and this looked corrective, so it looked like it was likely to trend up. Then you got impulsive down, and this looks a little bit more sideways or corrective. I would be leaning more towards gold dropping, although it's also helpful to look at the longer term chart. Let's go to the 2-year chart. This is going to be a key area right here. You don't want it to drop below that if you're bullish on gold. If it does, that'd be pretty bearish on gold, because it probably means that it's heading down to this key support level here. Like I said, we had these lower highs through here, and then we went to a higher high right there. If it can hold this little support area right here, that could be good. But like I said, the behavior right now would be, it's acting like it wants to go down. Because the whipsaw that's taking place on gold, there's really no clear trend. You can't say that gold is clearly trending in a direction. So until it can break out of, let's zoom back in. I'll give you 2 key areas there that would be obvious that we would really watch. Obviously, this move up here, if it can break back above here, would be very bullish for gold. And boy, this was the last run up. Well, like I said, that's going to be a key area. This is probably a bigger key area down here just because of the double bottom. Within this whole range here, it could whipsaw back and forth as it's been doing. But those would be kind of the key areas to watch. Like I said, if it breaks below here, it's probably heading down to here. It's really hard to talk about the gold charts because it's been all over the place. Every time I get bullish on gold, it has a big sell. Every time I get bearish on gold, it starts to rally. So, bottom line, just do the opposite of what I talk about, and you'll or on gold, and you'll probably do fine. Oil. Now, remember last week we were looking at oil is looking pretty bullish. It looked like this was a bullish ABC pattern. Notice whenever I draw ABC patterns, you'll probably hear, I have to catch myself from time to time, but most of the time you're going to hear me say potential ABC pattern or possible ABC pattern. I try to avoid saying it's an ABC pattern because ABC patterns aren't clear until we're looking back in the past. In other words, this was a potential ABC pattern right here, but it wouldn't be we wouldn't know for sure it was an ABC pattern until this thing broke out to a new high. As soon as it broke out to a new high, you could say, yep, that was a bullish ABC pattern. Now you say, well, Jerry, how does that help me if I can't know for sure ahead of time? Well, you can't. You're never going to know anything for sure ahead of time. And that's why we have to learn to recognize just the characteristics. I can still trade this. It means I still have to manage it. I still have to have a stop loss. I still have to recognize that it could end up not being an ABC pattern. And that I always try to prepare people that if you're looking for certainty in the markets, you're in the wrong place. You got to check that at the door. You can't get certainty in the markets. We want it. Everyone wants it. I never want to be wrong. I only want to be right. I only want to make money. I don't want to lose money. But that's not how this business works. So if that's my expectation, you're going to be miserable. You're going to be a miserable trader because you're always going to be longing for what you can't have. That you can't have that certainty. That doesn't mean, though, that we can't recognize probabilities. And the very basic fundamentals of trend analysis is stocks will tend to alternate between that impulsive and corrective behavior. Impulsive, corrective, impulsive, corrective. And so you're looking for that behavior. And it definitely looked like we had that potential ABC. That, an ABC pattern will typically end when wave C is about the same length as wave A. We had that going on last update where if that was wave C, it looked about the same length as wave A. We were starting to move back up in more of an impulsive type move. It started to jump up right here. And everything pointing towards going higher. Well, this is why we can never always be right. Because if the new variant of the virus didn't come out the night of the news come out the night of Thanksgiving, oil would likely have gone higher. It was all the oil stocks, everything was looking bullish on oil, and it was probably going to break out. Well, why did it drop then? Well, because the big fear is everything shuts down again. And what happened when COVID first came out? Oil just crashed because everything stopped. The whole world stopped for that shutdown period when everyone was just stuck in their houses for 2 weeks or whatever. I can't remember how long it was, but it was everything just immediately shut down. So obviously the worry is that we don't know how bad this new variant is at the time the news broke. So oil is going to just collapse here, and that's what it did. It dropped. Now, do I think that trend continues? I think a lot of it has to do with as the news breaks on how bad. Well, and a couple things. How bad is the variant? And so far, it's not looking like it's going to be that bad. Over the last few days, I think a lot of fears have been calmed a little bit. But what's the other fear with oil too? Well, if things start tightening, obviously we have economic conditions that are running hot, which is why oil has been taking off. What happens if the Fed starts tightening and it's to slow things down? Obviously, that means less demand for oil. I think we're seeing a reaction of that as well. I think that's today's reaction that we're seeing is that this could be this could be a start of a process of slowing things down that could impact oil. So let's back out, look at a little bit bigger chart here. Already, this is a deep retracement. If you're looking at this last move up, here was the last correction right here. So there was an ABC pattern that worked. We didn't know for sure that was an ABC pattern until we broke out. Then we can say, yep, that's what that was. This is a key low right here because right now you have a higher high and you still have a higher low. Typically, when you retrace, when you get this pullback, it's usually going to be about 50%. We already broke below the breakout area right there. So this is kind of this is what we're kind of watching for with the S&P 500 too. What if it blows through that breakout area and drops below it there? Well, this is what could happen. It can move down even further. You have to go down to the next floor, so to speak, of the elevator. How far can this thing drop? This is going to be critical, though, for oil because, like I said, that's where you had the higher high right here. You still have the higher low. If it breaks below here, now you've got a lower low, and you're kind of reversing that whole uptrend in oil there. In fact, we can go out. Did I go out 2 years or one? Let's go out 2 years. Yeah. So that's going to be critical that this holds right in through here. And we've already got a deep retracement of this move up. Now, typically it's about 50%. We can have a 61.8% retracement based on Fibonacci levels. But this is gone a little bit deeper than that. And now you could make the argument that, we've shot right over to the extreme left side of reverse risk. So oil is very oversold. It's probably due at least for a bounce. So in the very near term, you would expect that it'll probably bounce up a little bit. What you'd look for then is, can it bounce and get back above that previous breakout area right through here? If it get back above there, that would be very bullish. If it rallies up to it and then rolls over, then you got to start looking at this previous low down here as the next level to drop to. But if I were just trading, I wouldn't short oil right here. It's dropped too far too fast. It's due for that bounce. But I'd watch this area here. If it rallied up to this area here, then rolled over, I'd be looking to short oil right there. If it breaks out, it could and it breaks out on strong, get strong move up, strong breadth, and it's breaking back up. I'd be maybe looking to buy oil, expecting maybe that is the pullback and it's taking off again. But if the Fed is leaning more towards tightening, I just don't see oil moving as sharply to the upside as it did right in through here. It'd probably be more choppy as it's going back up again. So we'll keep an eye on that. We'll, obviously each week we'll get to more data, more chart data to consider there. But that's what I'd be looking for here, is a little bit of a bounce in oil over the next week or so. The dollar, I think it had a bullish reversal day today and it's pulled back. It's been in a strong uptrend. This looks like a little bit of an ABC formation here. It could still come back a little bit further to the breakout area. It doesn't have to. There's a little bit of a pullback right here where it kind of tested. But the dollar looks bullish, which, as I talked about in previous updates, that has tended to be more bearish for the market right now. It's not always that way, but just in these conditions, a stronger dollar has been viewed as being a little bit weaker or hurtful for the market. I was hoping to see a little bit of a stronger bearish reversal here. That just doesn't seem like it's taking place today. Now that could change, but we'll keep an eye on that. But as long as based on what I see right here, I don't see anything suggesting that is reversing trend from up to down. So we have to assume that that trend is going to continue up until we see different. And then the VIX, look at the spike in the VIX. This was the Friday spike. Came down quite a bit yesterday. Although if you look at the volumes yesterday, the market rallied on still lower volumes. So it had all the, like I said, all the conditions of a suckers rally. And then today the VIX is back up. It hasn't moved above Friday's high yet. But I think I definitely think that if the S&P breaks that key support area that I showed you, I'm not the only one that's seen that area though. If you watched, I bet you if you watched CNBC today, and I don't watch CNBC all day long, I can't stand all the same commercials 50 times in a row. So if I have it on, usually it's with the volume down. But I guarantee you somebody has talked about that. If they've done any chart analysis, they talked about that. Anyone knows how to read a chart can see that previous breakout area as a support level for the S&P and a focal point that we gotta watch. So, but if that gets broken, I promise you the VIX is going to spike higher because that's going to be a key level. But those professional traders are saying, could be more downside, better buy protection. They go right to the VIX there. But definitely elevated VIX is telling us that the market is concerned about the sell-off we're already concerned. We're already looking at it from a concern point of view. SMH, this is what we're kind of relating with the Nasdaq 100 and a very similar chart where here's the initial sell, didn't pull back very far, jumped back up yesterday, and then now you got a little bit of a bearish inside day. So you have an upward move, a big bullish candle here, and then you're inside of it. Your body of the next day is the opposite direction and inside of it. Now you did have a little bit of an intraday high, an intraday low that moved outside of that, which does weaken the inside day pattern a little bit. You like to see all the price action be contained within that candle. And we didn't see much of a run up. It was just a one-day run up there, so that weakens that a little bit. But if you're looking at it as this is wave A, this bounces wave B, and this is signaling maybe wave C. Maybe wave C brings us down to the breakout area. Now this would be a bigger drop to the breakout area. But this is something to keep an eye on right now. It seems like chip stocks are holding up pretty well. That could be a bullish argument. If it can continue to hold up pretty well and not pull back very far, it might be a sign that maybe the selling is done. But if you really start seeing the Nasdaq 100 start selling off in a bigger proportion than the other indexes, that would be a very bearish signal. So it could be that they're trying to hold on. They're trying to hold the market up. There's a few stocks that are trying to hold the market up. They might succeed, but if they fail, you'll start to see this really drop down. But this is something to keep an eye on here, especially if it starts selling off big. Does it hold that previous breakout area? If it gets down to those levels, that would be a key area to watch. Now, transports have also dropped a decent amount. So, you could make the argument they've corrected a pretty good amount. You've had a little bit of resistance right through here. We're very close to that area there. We're at about a 50% retracement of this run up. Oops. This run up right here. But you'd want to see if that could stabilize and start moving back up again. All right, very long time today looking at the charts, but the main focus of this class is the market update, and I really am not recommending getting into any new positions, although we'll add some into the watch list that we can keep an eye on. But real quickly here, and some of this I might just do outside of class to save time, but let's go to the portfolio here. We're still down about 9,000, almost 10%. But again, I can't emphasize that with the conditions we've had the last couple months, to only be down that amount is good, and have a lot of cash available, and have even more cash available after we make some of these moves today. That's going to be key, because once we kind of bottom out and start moving back up, a lot of these charts are really going to take off, and we're going to overcome that deficit very, very quickly. But this is why you really manage things to keep the losses low, so you can rebound from that pretty quickly when things start to bottom out. You want to have a lot of cash at the bottom. And again, hopefully, if there's anything you've learned over the last little bit, is that as conditions look like they were deteriorating, what did I do? I started just getting out, building up this cash reserve here. Imagine if I had all this build up and we had the last 2 days, we would have been down probably double. And now you've got a lot, you're down 20%. You got a lot to overcome, and you don't have as much cash at the bottom to overcome it. Now, in some cases, I could have even done a little bit better than this. There was a few positions I was thinking of stopping out of before the, SENS. I was thinking of stopping out of early before the Thanksgiving weekend, and I didn't, and took a little bit bigger loss on that. But you can always second guess. You can do that all day long. I am going to stop out of it now. We're currently at $3.04. Our stop was at $3.15. Now on JILL, we're still 4 cents or 34 cents above our stop, but I just don't like the chart. And some of these stops I set. This was one of them that I kind of set a little bit more of a random stop. I'll show you that when I show you the chart. And so, I can make, it allows me sometimes to make a little bit of a judgment call when it gets down there. The only one and then this one, RCMT, has been performing well, but it's looking like it's right at a breakout here. I don't think it's going to break out here with the market conditions. If it does, I can always get back in it, but I think I'm going to take profits on that one. And then I think the only one I'm going to hang on to is LRY, and I'll show you that one here in a second. But let's take a look at SENS. We already have a sell signal on it. Our stop was below here. We're clearly below that today, so this is an easy one just to go ahead and get out. In fact, we're off the lows of the day. I waited till class to do this. Actually, it was a good thing this time to wait till class. We're able to get out a little bit better price than what I was looking at earlier, is what I mean to say there. But let's go ahead and sell this one. Current, it's showing here at $3.04, so 2,000 shares. At $3.04. So right about $1,400 loss there. And then on JILL, I didn't have my stop below here. And it actually wasn't even below here. It was like right in this area, somewhere in this area right here. It was kind of a weird, and that part of that was just because we were all the way up here when we got in. We got in on a breakout above, a breakout higher, and then it had this little pullback, and looked like it was. Well, I think we got in somewhere in here. Maybe it was in. I can't remember where we got in. It was either on the breakout there or on this little pullback here. But I didn't have a real clear spot to put the stop, and I didn't want to have it below this area right here. Anyway, I just don't like, you could make the argument a few days ago, this was wave A, wave B, wave C, and it could still take off again. But we're still moving lower, and it just looks like it's probably has more downside. Again, if I'm wrong, I could always jump back in it again. If it goes back to a buy signal, but I'm just going to go ahead and clean up right here. I'd rather have the cash and get into something different. That's another argument is do I hold this and have this go back up, wait for this to go back up, hoping it goes back up? I'm not quite at my stop yet, or would I rather get out right here, save the cash, and then get a stronger stock that's breaking out of a couple of handle formation or something like that, has a higher probability of going higher, That's what I always tell people to ask themselves about. Some of you have had positions that have just gone way, way down, and you in your mind you're saying, well, I haven't lost the money yet, right? The stock I bought up here, I bought it up here, and it dropped all the way down here. I don't have the loss yet until I sell, right? But technically, I can hold on to this forever. And so, you bought it for, you spent $10,000 up here, and now that position is worth $2,000. And you say, well, if I just wait long enough, it could go back up to $10,000. Well, ask yourself this: are the chances of this stock that's just gotten hammered, are the chances of it going back up to $10,000 from $2,000? Is there a stronger probability of that happening, or would you be better off taking that $2,000 you have left, go find a stock that's already back in an uptrend that could make that same move and more likely to make that same move, but is a stronger looking stock? What would be a better chance to get that $8,000 back? That I have a tendency to just say, man, this has been a dog. Get out of the dog, get back into the rocket ship, right? Get back into a position that has a better chance of working out. And I'd take my loss, take this out here. Let's wait until the market bottoms and I have a rocket ship to jump back into. So let's go ahead and do that. Let's get out of this one. Uh, 450 shares, current price $15.84. $1,200 loss on that one. And then lastly, this RCMT. This has been pulling us or holding us up the last little bit. And I love the pattern still. Look at that nice cup pattern. Now it could end up with a handle where it's moving sideways, or it could even break out. What worries me a little bit is that it's going to be tough to break out. You're going to have some strong buying, and the market just isn't showing a lot of strong buyers right now, right? Very few stocks are up right now. And you're getting a little bit of a bearish inside day. Now, I know you have a tail higher and tail lower there. It's not a true strong inside day, but I'm going to go ahead and take the profits here on this one. And then if it breaks out, I can always get back in. If it has a little bit of a handle formation, I can always get back in. I think I'm going to just cash out of this one right here, just expecting right now, I think there's just too much to break out. That could be holding this thing up to break out. But this would definitely be one I'd be looking to jump back into if it can continue to look good and the market kind of bottoms out. So let's go sell this one, 1,200 shares at $7.84, and we're making $1,200 here. So we offset one of those previous losses, at least with the money we made on this one. And I'm going to hang on to Lilly because, again, it's got a cut pattern, but it's not at the top of that yet. And this looks like a bullish ABC pattern with a kind of a bullish hammer day today. Now, it could retest those lows if the market sells off again, but this one still looks okay. It still looks like it could still potentially move higher. I'm going to go ahead and just hang on to that one. I mean, I'm down a little bit from where I got in, but it still looks like it's still acting like it wants to go higher. So I'm going to go ahead and hang on to this one. All right, real quickly here on the watch list, there's going to be some stocks I'm going to boot out. I'm not going to boot them out in class here. I'm just going to tell you which ones I'm going to boot out just to save a little bit of time. Let's pull up I think for now, these oil stocks, a lot of these, this is a printing stock, but a lot of the oil stocks I'm going to hang on to because they look like they're in deep corrections, but they still look like they could be in C legs of an ABC pattern. I'm going to get rid of CONN. I know I was trying to see if it can break the support level first, but like I said, it'll show back up. If it starts to move back up, it'll show up in those scans again. So I'm going to eliminate CONN. I'm going to keep AMBA. I like that potential ABC pullback here on that one. KIRK, I'm going to go ahead and boot this one out. It's looking like it's going to a lower low right here. And again, it's a sell signal. It'll show back up again if it starts moving back up. STKS, I think I was going to hold this one just a little bit longer. AEHR, I'm booting out. Sell signal has gone lower. PERI, I'm going to boot out. Sell signal. Again, these will show up again if they come back. I think I'm going to hold on to KOPN. Hasn't gone to the sell signal yet. BUZI, I'm going to boot out. Went to a sell signal today. ATOM, I'm going to boot out. Didn't go to a sell signal, but this, if it does rally a little bit, this looks like a potential head and shoulders pattern if it does. I don't like them impulsive up, impulsive down, and then it's looking more corrective right here. That's a bearish looking behavior. BILL, I think, I might boot this one. I'm going to boot this one out too. MOGO, I think I'll boot that one out too. Loop, I'll hang on to. And then ARC, we already looked at that one. LPI is an oil, but again, this could be, here's a larger move up. This could be wave A, wave B, wave C, deep pullback here. But even though it's a sell signal there, I'm just going to try to keep an eye on some of those in case they do start to rebound. Same with SD, CD, EV. Just going to watch these just a little bit longer with the CDR. Is a REIT. Still looks okay. NOG, I'm going to hang on to. AMC, I'm going to boot out. EH, I'm going to boot out. Riot, I'll hang on to. It still looks all right. LPX, I'll hang on to. FTEC, I'm going to boot out. FTech. And that's it. All right, what might I add? Well, let's go to, and again, this is just adding to the watch list, but under retail, I like the chart on Technoglass, TGLS right here, 97 strength rank. And this could, I like the uptrend right here. This could be wave A, wave B, wave C right through here. It could still drop a little bit further, but that's why we're just putting in the watch list. And then under computer and technology, I went to the buy section here because I want to see if there's stronger stocks that pull back, that might have pulled back to hold, or that are buy signals but maybe have been moving sideways that could look like a good opportunity to jump into. Found a few that I liked. This GDYN, Grid Dynamics, 96 strength rank. It just has been moving sideways here and looking, and it tried to break out today. Now it could be a failed breakout. This could pull back, and it could pull back and maybe fill in this gap right here. But that's why I'm just putting in the watch list right now. But if it can break out on a solid breakout move, it could take off again. But that's why I'm just putting in the watch list. NVIDIA, 93 strength rank. Obviously, you've heard of this stock. Has a buy signal still, but it's kind of just been moving a little bit sideways here. Remember, we saw that chart of the SMH. Now, the SMH looked like it could have another move down. This one could have another move down, and that's why I'm just putting in the watch list. But if it can break out, if we see the market just start taking off, this stock has been a favorite. It should start taking off too, and it could be one that we might want to jump into if it does that. And the last one, very similar to the buy section here under computer technology, is this Z-scaler. ZS is the ticker symbol, 91 strength rank. But this could be just wave A, wave B, and get wave C, and maybe wave C brings us back to the breakout area. But this is just one that's piqued my interest. I want to just kind of keep an eye on it in case it has that C leg, goes back to that hold signal. We could be watching it. So I'm going to add those ones in. So if you need to remember, I know I went through that pretty quick, but I didn't have a lot of time. So if you want to review what I'm booting out and what I'm adding to the watch list, just go review this recording when it's posted. And that's it. That's all I have for now. We'll see you on Thursday for the stock specific class. We may not have a lot unless the market is bottomed out then, but may not have a lot, but it may just be stocks like we did today that we're adding to the watch list. And if there aren't a lot that I'm going to go through, I'll go through another market update heading into the weekend, how things look and how close we're getting. There'll definitely be some value there on Thursday because we'll know a little bit more about where we're at over these next couple of days. And so there'll definitely be something to talk about. All right. Thanks, everyone. Have a great week. Bye now.